Meanwhile, in China, the economy is losing steam. The latest economic data was released today and it shows a worrying trend. China is slowing down faster than expected. Broadly, there are three reasons for this. Number one, there's a big drop in investment. Number two, a slowdown in China's factories. And number three, weak spending by consumers. We talked about spending yesterday, so tonight we'll focus on the other two factors and we'll start with investment. There's a drop in fixed asset investment. What does that mean? Fixed assets, as the name suggests, are big long-term purchases made by a business. Things like land to build a factory, or machines to boost production, or trucks to deliver goods. These are not your everyday expenses. These are investments meant to last at least more than a year. So when companies spend on fixed assets, they're planning for growth, they're betting on more demand, they expect more customers and more output. But right now, that spending is shrinking. In China, fixed asset investment dropped by 1.7%. That's for the first 10 months of 2025, a drop of 1.7%. It may look like a small number, but this is the steepest fall ever recorded for this period. And it's a red flag. Because when firms stop investing, it means that they're having doubts about their future and their profits. And that is why this number matters. It shows where the economy is headed. This investment slump is feeding into factory outputs. That's the second factor driving the slowdown. China's factories are churning out fewer goods. Look at industrial production. It rose by just 4.9% last month. Now, this is a measure of how much factories are making, industrial production. At 4.9%, this is the weakest growth rate for this year so far. It's also lower than what economists had predicted. Basically, every growth engine of China has been hit, whether it's spending on roads, bridges, or ports, or investments in fixed assets, or even the real estate sector. It has barely recovered from the housing crisis. In fact, there are fresh risks of default. So even the real estate crisis is far from over in China. Loans worth over $1 billion could default. These are backed by property assets. And banks across Asia have exposure to this debt. I'll give you some examples. In Hong Kong, there's a real estate giant called the Parkview Group. It has a loan worth $940 million. This loan is due this week. The company wants to extend the deadline by 1 year. But the talks are still stuck. Similarly, another company is on the brink. It's a firm called Gore Capital Partners in Hong Kong. They have to repay a loan worth $260 million. They've already missed a payment. The debt matured this week. Now, the creditor can declare a default at any time unless they're able to reach a new arrangement with their lenders. And big banks have exposure here. We're talking names like HSBC, the Hang Seng Bank, and several banks from Taiwan. They face a difficult decision. If they keep extending loan deadlines, they only delay the crisis. But if they force a default, they could suffer bigger losses. So the impact of China's slowdown could spread. It could hurt economies and entities beyond Chinese borders. Having said that, there's a silver lining too. China's economy will grow at 4.9% this year. This is despite all the challenges that we just discussed. The government's target was 5%, so 4.9 is very close to the mark. It's something to cheer, although it masks the underlying weakness. Because the problem is not just the numbers, it's the wider trend, the slowing growth, the eroding confidence, both at home and abroad. Long story short, the world's second largest economy is struggling to find its footing.
Want the facts?
The latest developments?
News that gets straight to the point.
Well, we've got all three just for you. This is Firstpost Live, a brand new show, your window into what really matters.
Don't miss it.